My name is Jake. Welcome to the channel. In today's video, I want to talk about ESG investing. First off, I just want to say my voice is almost completely gone. I've been sick this entire week. Of course, our little baby boy, got my wife and I sick. He loves to put everything inside of his mouth. And everybody always told me, have kids, it'll be great, Yeah, fun stuff. So yeah, I am sick. I apologize if my voice is really scratchy. It's just kind of been this way for the last week. So hopefully you can bear with me here. In this video, I've done a ton of research. I've researched for hours and hours on, ESG. I've always known about ESG, but really I dove into, more from a dividend investor's perspective. Should dividend investors, care about ESG? What does it mean? And, that's really what I want to focus on in today's video. So I want to cover 4 topics in the video. So first off, I want to go over very briefly what ESG investing is, just kind of really high level, just the basics. Then I want to talk about, how ESG has evolved over the years, what it originally was and how it's kind of changed over these last couple of years. Then the third part of the video, I want to talk about what dividend ETFs do and do not incorporate ESG. And then the last part is I want to talk about and share my opinions as a dividend investor, what ESG, means to me. Is it important? Is it not? And I'm going to touch on a few things. And I think it might be interesting for you out there if you're thinking about it and you're trying to kind of put together an opinion for yourself. So I know ESG is a really hot topic when it comes to the politics behind it. So I am going to stay as impartial as I can. I don't like politics. I hate it. I'm going to try to keep a level-headed approach to when it comes to this. I don't want to talk about either side when it comes to the political spectrum of this. It's just so interesting to think about how ESG has changed so much, and we'll get to that in a second. But, it's like when you invest in the stock market, right? You invest today and then tomorrow the whole world, falls upside down and, you buy a stock one day and then the next day it's in the red and you're like, oh, darn it. I wish I had a time machine. I could turn back time and, have a do-over. And it kind of looks a little like this. I can't laugh. It hurts too much. Okay. All right. So let's talk about ESG. What is it really quick? So ESG is environmental, social, and governance. So what does that mean? It's really talking about, how companies approach these really important topics that we as human beings are facing, whether it be, when it comes to the environment, when it comes to social aspects of things, or, how a company is governed and run. Now, there's multiple layers when it comes to this. When ESG first came out, it was pretty straightforward. It's environmental, social, and governance. And, there wasn't so many subcategories when it comes to ESG. You could go into the really each subcategory of each aspect of what is environmental, what is social, and what is governance. I'm not going to do that here in this video because it would probably take all day. But when it comes to ESG and what's widely accepted and understood as ESG, it's talking about climate change, impact that the companies have on the climate, on our climate, natural resources. It's talking about pollution and waste, human capital, and corporate governance, right? So a lot of companies, a lot of tech companies, so I work in the tech industry, and, the human capital side has been very, pushed a lot with diversity, equity, and inclusion. And once again, I'm not going to get into the political side of this, but there's been a huge push when it comes to, certain industries. And I think most companies have adopted an ESG or a DEI strategy for their business, whether, their employees or their customers know it or not. A lot of times companies will put it down to the very bottom of their website just so that they can kind of check it off. It's kind of a checkbox type of thing for a lot of companies, not every company. Some companies, they kind of put it front and center, and they're very socially aware, and this is kind of what they what they are, right? And so be it. What's interesting is this is what I want to get to here is Typical investment portfolio exclusions from ESG portfolios include tobacco, alcohol, weapons, and gambling. Now, this is what I'm going to lead into the next segment of this video is how ESG has evolved and changed. ESG has been around for quite a while, and there's a research firm in MSCI, and they've come out. They don't just focus on ESG; they focus on a lot of investment research. But when I look back here in 2018, they came out with a document where they show what is included in ESG, right? And what is excluded. So ESG, back in 2018, when this was first kind of, bubbling up and taking, mainstream media by storm, is it really draw a hard line and excluded, okay, if a company is involved with controversial weapons, so maybe, governmental contractors like Raytheon, General Dynamics, or Lockheed Martin, for example, that produce weapons, they were excluded from ESG. It was black and white, that no questions asked, they were excluded. Nuclear weapons, civilian firearms, tobacco, thermal coal, oil sands. And I think, if I remember correctly, also like oil companies, right? Like Chevron, Exxon, when this first came out, oil companies were bad, right? Oil bad, electric vehicles good. That was kind of the narrative, right? And so at its core, and how I talked about earlier, those subsections of ESG, and there's been so many split offs, right? It's kind of like back in the day, and I don't want to get too off on a tangent, but you got like the Catholic Church, and then you have like some break-offs of the, and you got the Lutheran Church, and you got massive break-offs, and with every religion, right? It's not just with one, like in every sense of it, there's breakoffs, right? And people kind of form their own ideas and opinions. And that's kind of what's happened with ESG, right? Where in the beginning you had ESG was just kind of this blanket statement of this is what it is and what it isn't. And it's kind of evolved over these last couple of years. And because of that, because it has evolved so dramatically and so quickly, you're seeing firms and a lot of people and entities and government agencies and states kind of say, hold on a minute. No, this is actually not really what we signed up for, right? This is not what we consider, to be, a priority for whatever means, right? And you see companies like Vanguard quitting the net zero climate effort, and that really sparked a lot of controversy. It's like, oh, Vanguard, they're backing out of this agreement to reach net zero, whatever, right? And so you're seeing massive companies like Vanguard step away from it, where you have other companies like BlackRock and State Street stepping into it and say, no, we're all ESG. And then you got states like Florida and others say, no, we're going to ban ESG investing from it's so interesting to see how this initial concept of ESG, how it started and how it's really evolved. Right. And I don't want to get too far into the politics of this, but, having lived outside of the United States, I used to live in Germany for like 10 years. Politics were not really front and center in my life when I was living in Germany. When I came back to the States, it was like, once again, back in your face, like it's the land of extremes, and you have extremes on both sides, right? On both the left and the right. And these identity politics is so much more extreme in the United States, and it's so unfortunate. It's so sad. It really makes me, I don't really know any other word to say than, I'm just disappointed. It's just sad, but it is what it is. That's the reality of life. Not everything is perfect. But that's the reality of how ESG over these last couple of years has evolved. All right, this next segment, I want to talk about what ETFs, what dividend ETFs incorporate and do not incorporate an ESG type of strategy. In order to do that, I spent hours and hours researching, watching, looking at blogs, watching videos, trying to understand how people view this. And I came to the conclusion that there's not one size fits all approach to this, trying to find what ETFs are and are not ESG friendly. And so let me share with you, let me kind of walk you through my process here. So first off, I would go and I would find, different articles, different resources when it came to ETFs that were ESG friendly. What I noticed that 99% of content is around ESG friendly ETFs. There's not a lot of content out there that focuses on not ESG friendly. I found that pretty interesting. Maybe it's a Google algorithm that only wants to push something. I don't want to get into conspiracies here, but yeah. So that was interesting. So there's definitely a lot more information on what ETFs are ESG friendly than are not. And so there's different scoring mechanisms that different websites, different tools use to score ESG friendliness. Are they friendly? Are they not? I just want to show you this really quick. So this is a website here, socially responsible ETFs, scored based off of ESG. And you'll notice here HDV, right? So from BlackRock, iShares. And I'll show you in a minute that this is actually kind of BS. It's so interesting. But HDV, it is ESG friendly. But when I actually go in and show you a different tool, it doesn't score as high as you would think. And so that's what made researching for this video so difficult, is all the information out there is so polarizing in one or the other direction. And it made it really challenging to actually get objective responses around what is and what isn't ESG friendly. So what I did is I went and I looked at, okay, all right, well, let's dive in and let's take a look at HDV, right? The high dividend ETF from iShares. And let's take a look at some of their top holdings. What's their number one holding? ExxonMobil. And I'm just like, wait a second. Their largest holding is an oil company, another oil company, a tobacco company, a healthcare company. And I started scratching my head. I'm thinking to myself, wait, I thought ESG was like, clean energy and, no tobacco, right? And then in their top holdings, they got a tobacco company and two oil companies. And I'm thinking to myself, wait a second. Is there some shenanigans going on here? So I wanted to go and I wanted to look a little bit deeper, and I want to see, okay, well, let's look at these companies. Let's see, what is the ESG rating, for Morningstar. I think Morningstar is pretty impartial. They're, whatever, right? Take everything with a grain of salt. But I look here and I see, okay, gambling, right? We saw back, 2018, no gambling stocks, right? Now I look at MGM, a gambling stock, and they have a 3 out of 5 ESG rating score. I'm just like, what the heck is going on? I feel like, I just want to throw up the papers. I'm just like, what? WTF? All right. Then, okay, well, let's look at Lockheed Martin. All right, Lockheed Martin, it's a defense company. It's a firearm. Okay, they get a 2 out of 5. All right, that makes a little bit more sense. ExxonMobil, 2 out of 5 ESG rating here on Morningstar. And then Altria Group. It's a tobacco company. 3 out of 5 stars, a tobacco company. I just don't get it. So then from here, I thought to myself, okay, well, I know that there is an ETF that openly states that they take an ESG approach. And that is the JP Morgan Cover Call ETF in JEPI. They openly say very candidly, very front and center, that they do take an ESG approach. Okay, cool. So this is an ESG approach. ESG is important to them. But what I will give a spoiler, when I go in and I show you the tool that I'm going to use to calculate and see ESG, they actually score lower than ETFs that don't claim to have an ESG approach, which leads me to believe, is this a gimmick? Is it a gimmick? And I'm just like, WTF. Okay, whatever. Okay, so that's just what I've noticed so far. All right, now I want to cherry pick some examples. After doing hours and hours of research, I want to share with you some ETFs that I've found that are actually pretty decent and that score pretty well on an ESG tool that I'm going to show you here in a second. So first off, the first ETF that I found, which was probably the highest rated, is the ticker symbol NUDV from New Shares. It's a fairly new ETF. It's a very, very low assets under management, so not a very popular ETF, but it's only been around for about a year. It has a pretty low expense ratio. So if you are an ESG purist, this is an ETF that you may want to check out. Okay, so let's take a look just as a few examples here. Let's look at some of their holdings. Do they have any tobacco companies? No. Do they have any oil companies? No. Okay, so if you're a purist for ESG, this is maybe one that you may want to check out. Let me take a look and let's look at another one. This is DJD from Invesco. They have a very low expense ratio. They have a low assets under management. Let's take a look at their holdings. Verizon and the oil companies, well, we got Chevron down here. So they do have a little bit of Chevron. I don't see any, tobacco companies, though they may have it in some of their lower holdings. Okay, whatever. But this one scored very, very well that I'll show you here in a second. The next one here is an international ETF. This, I do want to say, so here, let's take a look at it first. The expense ratio is a little bit higher, just under $1 billion in assets under management. The holdings, I probably won't know very many of them, right? So they got, okay, they got a few. All right, so pretty interesting. So in doing my research, what I did notice is that the US is definitely behind the curve when it comes to ESG investing. There are a lot more international ETFs that are true, like pure ESG funds, right? That don't kind of, fiddle around with, the subcategories of, what I've noticed, there's a lot of them that make a lot less exceptions to the rule when it comes to ESG. So if you're more of an ESG purist out there, then you may want to look at some international ETFs, dividend ETFs, or just look really, really closely at the methodology and the holdings, because some of these funds, they're kind of a gimmick, right? And so I'm just calling it as I see it. Now I want to show you a few examples, some cherry-picked examples of some ETFs that are not ESG friendly. Okay, so the first one here is CGDV. This is Capital Group Dividend Value ETF. It has a low expense ratio, pretty decent assets under management. You look at the holdings here and you can see the top holding is Raytheon, right? So a defense company. General Electric, let me see, British American Tobacco, right? So right off the bat, you got some tobacco and you got some weapons companies in here. The next one here is FDL. This is First Trust Morningstar Dividend Leaders Index. It has an expense ratio of 0.45, $5 billion in assets under management. Now, once again, these examples are cherry picked. This is not like an index from lowest to highest. These are just a few examples that I cherry picked. Okay. FDL, they have ExxonMobil in here. They have Philip Morris. They have Altria Group, right? So yeah, tobacco and oil, right? But what's interesting, we saw ESG funds, which also had tobacco and oil. So it's kind of like, what? Okay, whatever. The last one here that I cherry picked was the Vanguard Energy ETF. Pretty straightforward, low expense ratio, high assets under management. This is an energy ETF, right? So you're going to get oil, you're going to get everything under the sun. But when it comes to the rankings, which I'll get to here in just a second, this one scored very, very low when it comes to ESG. Now, I want to go over here really quick. Everybody talks about BlackRock, and I kind of am skeptical when it comes to BlackRock. Let me zoom in here. When it comes to their website and when they talk about their ETFs, when you go down here and you look at the sustainability characteristics, they show that this fund does not seek to follow sustainable impact or ESG investment strategy. I'm kind of confused by that. It seems a little bit contradictory because, in other research that I did, HDV was scored very, very high for ESG. And I'll show you another example, DGRO, one of my favorite ETFs out there. The exact same thing. It says that they don't have, this fund does not follow, an ESG strategy, which is kind of weird. But the thing is this fund follows an index, and the index is not dictated by BlackRock. And so that's why this fund does not follow a specific ESG strategy, right? So that's very, very important that you understand. This is following a different index, okay? And then BlackRock does not pervert the index by having their own ideology or, criteria for it. So if you're looking for a kind of a middle ground where you're like, oh, ESG is not so important, but, I still want to, invest into companies that are, responsible, et cetera, et cetera. This is kind of a good middle ground. Now, the same thing can be said for my friend here, SCHD. So SCHD, they're not in a like it doesn't explicitly say on the website that they follow an ESG approach, because SCHD, all SCHD is it follows the Dow Jones 100 index, dividend index, right? And in that index does not follow an ESG approach, right? So when you look for companies like an Altria Group here, let's see if we can find Altria Group. Yeah, so Altria Group is a tobacco company, is found in SCHD, right? So, but once again, when we were looking at those other ETFs that said that they were ESG friendly, they also had tobacco companies. So it really comes back to, once again, what is ESG? Is it this version of ESG? Is it this breakoff version? So I'll let you decide that. Now here, if you really want to get into the nitty gritty and you really want to search, is this ETF ESG friendly or is it not? This is the tool for you. So if you're a ESG purist and you're like, I only want to invest into ESG dividend funds, this is maybe a tool for you. Okay. Or if you're like, a rock hard, complete polar opposite, you can go in here and you're like, all right, I want to find no ETFs that have zero ESG because I can, right? Because I can. Whatever you are, you can do whatever you want. So this is, once again, from MSCI. I will leave a link to this website in the pinned comment below. It's actually a really useful tool. Okay, so if we type in an ETF in here, let's look at, for example, we said that this was more of a purist type ESG dividend ETF. What you can look at here is you can look at different criteria, right? You can see how well the fund aligned to global climate goals, and you can check and you can see, okay, how they compare, accordingly, right? And then you can take a look and you see, how is the fund currently exposed to climate transition risks and opportunities? You can see how they rank there, right? And then for this video, what is the impact of environmental, social, and governance ESG issues on the fund? And you can see here how well they rank. And so this is what you want to take a look at here, is the laggard, average, and leader. This is the percentage of the fund's holdings which receive this rating. And you can see here that they have a very, very high rating when it comes to an A, AA, and AAA. Okay. And then just for consistency here, you can see how aligned is the fund with best practices on board independence and diversity. You can see that if that's important to you. And is the fund exposed to companies involved in business activities that some investors want to avoid? So for example, tobacco, controversial weapons, severe controversies, right? Like, whatever that may be, political or human rights or whatever it may be. And so with this one, the Nuveen, I can't even pronounce it, especially with this cold, Nuveen, NUDV, this ETF is really, really ESG friendly. Let's take a look at the next one here, the Dow Jones one from Invesco, and you can see the ESG scoring here. So you can see that it scores also very, very well. Let's pull this up and let me show you kind of the ranking here. So 48 plus 35 plus 10. This scores a 93. So 93% are A or better. And just for consistency, let me do this really quick. Let me show you the other one really quick, just so that you can see it. So we've done it. So their one was 93. This one is 30 plus 49 plus 19, 98. So almost entirely, right? So a purist dream. All right, now let's take a look at the international one that we took a look at. And let's see here. So you can see there's a little bit less. Let's pull this up and let's see. So 23 plus 40 plus 18, 81. So it drops off quite a bunch. So this is kind of the methodology that I took, and it was looking at dozens and dozens of different ETFs. And these were the ones that ranked really, really high, or conversely ranked very, very low, which we'll get into here next. Next, let's take a look at this one here that we looked at, and let's see how it ranks. Okay, so you can see here that 7 plus 12 plus 24. All right, so 43. So you can see that this ETF ranks significantly lower. And then if we look at the other one here, FDL, and we look at this one, you can see here that, let's see here. You can see that it ranks also, pretty well, actually. It's still ranked well, but it's not as high as the others, right? So now, just for the sake of time here, so this video is not like 10 hours long, let's take a look at SEHD really quick. So SEHD is actually ranked pretty well. So you like 25 plus 41 plus 17, it's ranked actually really, really well. It's ranked 83. So it's, even though it's not listed as an ESG, ETF, it ranks very well when it comes to ESG. Now let's look at one more. Well, let's look at two more here. Let's look at DGRO. So DGRO, for example, ranks a little bit lower. Let's take a look and see DGRO 38 plus 27 plus 9. You can see it's not like bad, but it's not like the other one, like that 98 one. Right? Now let's look at one more. Now this is kind of what's interesting. So remember we saw that JEPI says that they have an ESG integrated approach. Let's take a look at that. Let's see how true that really is. Well, yeah, it is, but let's take a look and let's see. So you got 31 plus 23 plus 10. It ranks lower than SEHD and DGRO, two ETFs which actually do not claim to have an ESG approach to it, right? So it's kind of like you got to read between the lines. It's like, when you go to the store and you see, with 0% trans fat or, no fat. And then you look at the sugar and there's like 20 grams of sugar, added sugar, right? So you really, really have to be smart. You don't want to be fooled. Just because it says ESG, it doesn't necessarily mean that it's really ESG. All right, now I want to share my thoughts on what I think about ESG as a dividend investor. So I'm trying to take an impartial approach to this the best that I can. When it comes to ESG, now, I think for your average person, and for me, I would consider myself in this bucket as average, where ESG is important, but I'm not going to die on that hill, right? I'm not going to die on the ESG hill. I think ESG, when it comes to investing, I think it kind of is similar to that pink tax, right? Where it's marketed to the public and there's a markup because you're paying for that premium, that ESG branding, right? Kind of what we saw with the JP Morgan JEPI cover call ETF, right? And so it's like the pink tax where if a product is pink and it's the exact same product, for men, but there's a markup because, marketers know and data shows that women generally pay more, right? Or for whatever reason, right? Don't kill the messenger, right? I'm just stating that this is kind of the reality of how things work. That pink tax is kind of how I view ESG investing, okay? It comes really with that pink tax. Does it really add value to the total return? I don't actually think so. And that's why you're seeing companies like Vanguard backing away and saying, well, actually, it's been proven that ESG does not actually improve total returns. Therefore, we're backing off. Okay? So, all right, whatever. So that's one side of it. The next thing is, in my opinion, if you're one of those people who says, I am very, I have a very strong moral compass, and I really only want to invest in companies that I believe in, that I feel are good, genuine companies. Okay, there's going to be something for you. And I think after the research that I've done, this is an example of an ETF that you could consider, right? You know how we talked about in the earlier part of the video where, how the meaning of ESG kind of got perverted or changed. I use the word perverted as an extreme, but it got changed, right? And so if you want more of a purist type of approach, then there's definitely going to be ETFs out there for you. And there may be ones that you may want to consider. And this is just one that I found. So if you're a purist, there's something out there for you and you can find that. Now, if you're more kind of in the middle ground where you're like, yeah, ESG is kind of cool. It'd be nice. I'd like to invest into, sustainable companies. I don't want to invest into companies that are, harmful and, but, you're not going to die on that hill, right? It's not the be all end all. There's definitely ETFs out there that rank very highly, but don't have such a line in the sand approach to their screening. And there's ETFs out there like SEHD and DGRO. Those ETFs are kind of like that middle ground where you're kind of getting, that middle of it, right? So depending on who you are, there's something out there for everyone. But those are, that's my opinion on ESG investing as a dividend growth investor. I hope that this was helpful. I hope that, kind of opened your mind to understanding how ESG works. So yeah, hope that was helpful. Thanks for watching, and I'll catch everybody in next week's video.
So please, whatever. I want to reach 1 million likes. Okay, thank you.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.